In this video, I'm going to show you guys exactly how you could have passed a funded FTMO challenge in just one trade. I'm also going to break down my strategy step by step, the 3-step process that you guys need to follow when executing a live trade in the markets. This example is on XAUUSD on the 4-hour time frame. However, this trading strategy can be used across all asset classes, whether that's crypto, stocks, forex, and also any time frame. Okay, so let's jump straight in here, guys. This is XAUUSD, also known as gold, on the 4-hour time frame. So number one here is our break of structure. Okay, break of structure. We want to see an impulsive move to the upside if we are looking for a long trade. Okay, so clearly this move here is a strong break to the upside. You can see the momentum pushing price to the upside there. Okay, you can see clearly we have broke structure to the upside, so we can mark this on as a BOS. Okay, so what is a BOS? That is short for a break of structure. That's just an indication to us as traders that, you know, price is pushing to the upside. We're breaking these higher highs here. Okay, so this is our high. Okay, this is our higher low. And then we may have made a new higher high in the market. Okay, so it looks like this may be the new higher high. Okay, so we have a higher high, followed by a higher low, followed by a strong break to the upside there. Okay, so we can go ahead and mark on our GL, which is our guarded low. Okay, so this is our invalidation level. We do not want price to break below our guarded low. That would indicate to us as traders that this trade is no longer valid. Okay, so for example, if price comes down here and closes below our guarded low here, that would indicate that this bullish market structure is no longer intact. It's no longer valid. Okay, we can go ahead and mark on our POI, which is number 2, our point of interest. Okay, so this is the order block before we had the break of structure. Okay, so the order block is the last down candle before the break of structure. So we can mark that on here from the open of the candle down to the guarded low there. Okay, so that is our POI. That's that blue area here. So if and only if gold comes back into this area, which is around 1982, so 1982 to around 1976, within that area, we can be looking for a long trade. Okay, so this is the unrefined version of the strategy. Therefore, we're not looking for any lower time frame confirmations. We're literally just taking the trade based off the raw market structure. Okay, so now that we have our number 1 break of structure, number 2 POI point of interest, we have our order block. Number 3, we need to set a limit order just above our POI. Okay, in regards to a stop loss can go just below the guarded low. Give the trade a little bit of room to breathe, okay? And therefore we have a logical and mechanical stop loss, a mechanical invalidation level, because if this trade does go against us, then we're going to take a small loss on this trade. So it's very, very important, whether you're a new trader or an experienced trader, to have a set invalidation level and you know exactly how much you're risking and how much you may potentially lose on this trade if the trade does go against you. Okay, so number 3, we've set our limit order at 1983 there. Okay, and we're just waiting for price to come back into that area. Okay, in terms of targets, we're going to be targeting the equal high here as a first TP, and then ultimately we're going to be looking for further continuation to the upside. Okay, and the reasoning behind this trade and why we're looking for a long only out of our POI is because imagine this. Okay, so institutions have to sell into these lows here and they will aggressively buy in order to create that fuel. So the fuel to move the market is created from the institutions selling heavily. This entices retail traders to also go short, tricking them and ultimately using them as liquidity to move the markets to the upside. Okay, so when price comes back into this area, the institutions need to decide whether are they going to exit these short positions that they use to create liquidity. If they choose to exit them around break even, that will ultimately result in a bounce to the upside. Also, they may look to add further long positions around this area because that's where they bought last time. Okay, so let's play this on, and we're looking to get triggered into this trade here. Okay, so you can literally see that price came down into our POI and literally tapped it to the decimal. Okay, that's why these POIs are extremely powerful and they're extremely important, and they are the only place that you want to be looking for a long trade. Okay, so we're triggered in the trade right here, just above our POI. Price may have came, it's possible that it can come a little bit lower. You don't know exactly where in the POI that price is going to come down to, because in theory we don't know exactly where the institutions sold from or where they're going to look to liquidate them positions. But roughly in this area, that's the extreme demand where the institutions would be looking for long in that trade. So you can see we're triggered in there on that wick to the downside. We're triggered in at around 1400 UK time, so 2 p.m. UK time. One thing to note about that is, that is a high volume time, and we are expecting a lot of volume to come into the market around New York Open. Okay, so let's play this trade on here. Okay, and ultimately you can see that price moved around a 1 to 6.7 risk to reward, and ultimately, ran them stops to the upside. So what you have to imagine here is all of the retail traders that try to get in this market too early, their stop losses are going to be above these highs. Therefore, the institutions are going to look to reach for that liquidity. They may reach for that liquidity. It's not guaranteed, but there is a high chance that they're going to reach for that liquidity above the highs and then ultimately look for some further continuation there. Okay, don't get me wrong. You don't need to capitalize on all of this move. If you risked 2% on this trade, you had a potential to make up to around 14% on this trade, 13-14%. So if you risk 2%, the potential to make around 14% there on just one trade. Don't get me wrong, you're never going to capitalize on all of the move. However, if you can, take 3R, 5R, even if you can take 2R out of this trade, you can then reset and then look to execute when another valid setup takes place there. Okay, so just to recap everything here. Okay, so number one is our break of structure. That is this here. We broke structure to the upside. Number two is our POI, which is this area here, and we draw that on from the open of the candle down to the low, the open of the last down candle down to the low. Number three is the unrefined entry of setting a limit order just above our POI with a safe stop loss below our guarded low. So we have a valid invalidation level. We have a very mechanical rule-based strategy. Okay, so let me know your thoughts on this one. Okay, please like, comment, and subscribe, and I will see you guys in the next video. Okay, take care, guys. Bye-bye.